Hello, everyone, and welcome back to another episode with your boy Money Spence. In today's episode, we're going to cover one of the best moving average trading strategies as a day trader, and it's very profitable as well if you use it effectively. It's perfect for beginners that's going to utilize time frames like the 1 minute, the 5 minute, or even the 15-minute time frame. So before we take a deep dive into this video, make sure you get this video to 100 likes, subscribe to the channel, and without further ado, let's take a deep dive into the lesson. Today's illustration is going to be based off of AVGO. So the EMAs that I have on my chart, it's the 25, 50, and the 75 EMA. The 25 EMA, that's the short-term trend. The 50 EMA, that's the mid-term trend. And the 75 EMA, that's our long-term trend. So to use this strategy effectively for a buy setup, which would be a bullish trend, we must have the 25, the 50, and the 75 above each other. So as you all can see on the open, we had the green line right here, that's the 25. We have a yellow line right here, that's the 50. And we have a red line right here, that's the 75 EMA. Whenever we're trading above all of those EMAs and they're aligned, and the candlesticks, keyword candlesticks, are trending above the EMAs and they're trending towards resistance areas or even breaking above those resistance areas. You want to focus on a move towards the upside. You do not want to focus on a bearish move towards the downside unless you catch it up here near resistance. Like right here, for example, at 10 a.m. We had resistance up here in this area between $179.50 through $180.49. And then we started to pull back to the EMAs, but we still didn't have a strong bearish confirmation. Now, let's say, for example, if we would have broke below these EMAs and the red line was above the yellow line and the green line was above the yellow line, that would be considered a strong bearish confirmation. But for this particular example, we had a strong bullish confirmation. These bullish candles, they were above these EMAs. So whenever you want to focus on a move towards the upside, make sure the candlesticks are trading above these EMAs. And 9 times out of 10, you should have a profitable trade if you play it effectively. You don't want to buy up here. In some cases, you want to wait until it pull back to the EMAs, maybe the 25 or the 50, or if you want to be on the safe side, the 75 EMA. And as long as we're holding these EMAs, get in on the pullback and then ride it back up. On this particular example, you could have got in between $173.50 through $174.49. And then you could have rolled the move back up once you saw that the buyers were stepping in and we were holding the EMAs. So that's all I have for you all today. A simple, basic, profitable EMA strategy for beginners. Make sure you like and subscribe to this YouTube channel so you can stay up to date with more valuable trading tips and weekly trading education.